Hey, what's up guys? Brad here. So today I want to talk about a quote from Warren Buffett that's been flying all over the place in the last few months, and give a little context and talk about what I actually think it means. It might not mean what you think it means in terms of what I think it means. So let's give some context. Essentially, Warren Buffett said, if you want to know how to be rich, close the door and I'll tell you a secret. Be greedy when others are fearful, and be fearful when others are greedy. Now, okay, so what does it mean for others to be fearful? Essentially what it means when others are fearful is that they're selling irrationally, independently of the price of an asset. Okay, they're just heading for the doors because they don't know how low this thing is going to go. As far as they know, everything's going to zero. Okay, there's mass panic. People don't trust the market anymore. Okay, all people want to do is preserve as much of their cash as they can. So they want to sell, they want to convert to cash, and they want to just put that cash, have it in their bank account, or even better, under their mattress where nobody else can get to it. They're that fearful. So, when people are fearful, it basically means the price is going to be falling as compared to what the asset is actually worth, the underlying value. Say, we talk about stocks here on the channel, so let's talk about stocks. There's an underlying business value that a share of a company has, and that's based on what the business is going to produce years into the future, and then discounted back to today. That's essentially what the share is worth. Okay. Now, when you have mass fear, the stock market is an auction-driven market. So if people are afraid, if everyone wants to sell, if there's a lot more selling happening than there is buying, that's going to drive the price down. Okay? It's going to go down, down, down. Everybody's fearful. So to be greedy when everybody's fearful means to be aware of what's happening when everyone's fearful that the price is, dropping relative to the value of the asset. Okay, everything is going on sale, and there's a fire sale in the stock market. And because everyone is focused on worst case scenario, everyone is looking at the risk of losing money. That's what they're afraid of. They're afraid of losing money, and because that drives down the price, there's actually the lowest risk of losing money. When prices are low, when the market crashes, that is the least risky time to be an investor, even though it feels like the riskiest time emotionally. And so that's really what Buffett is saying here. Be greedy. Buy as much as you can of these assets when they're at depressed prices, when mass fear in the market has driven the price down to the point where there's virtually no risk in buying that asset because the price is so low as compared to the value. You're getting a huge margin of safety. You're getting a huge discount on the stock to the point where there's very little risk of losing money. Okay, you can't go down much more, right? But you can go up a lot. I mean, you can see how far you can go up just to get back to even. If the stock market falls 50% and you buy after that 50% fall, if the market just comes back to where it was, you've made 100% gain. Okay? For example, say a stock is at $100, it falls to 50, okay? Falls by 50%. If it goes back up to 100, you're doubling your money because you're getting in at 50, it's going back up to 100. So it's really important to be greedy when things are really cheap, and things are really cheap when there's fear flooding the markets. And we started to see that a little bit back in March. I don't recall, I think the market dropped somewhere between 20 and 30% from its highs in a matter of weeks. And we've seen quite a rebound since then. You know, a lot of people think, well, how is this happening? Unemployment numbers are basically the highest we've ever seen in the shortest amount of time that we've ever seen. And the stock market is acting like, you know, everything is rosy, everything is peachy. I don't know. I don't know why that's happening. Anyone who tells you they know why that's happening is trying to sell you something, most likely, because you know it's a very complicated. There's a lot of interconnected relationships in the stock market, and you know if I had to guess, my best guess is that as the earnings reports come out for these businesses, as people really start to see the hit that the current situation is taking on businesses, I think we're going to see another dip. Of course, I don't know. I'm not banking on that. When I find a company that I can buy at a bargain, I'm going to do it. I don't really care what's happening in the macro environment, what's happening overall with the stock market. At any given time, certain companies can fall by a lot and other companies might not fall at all. So there's always bargains to be had in the stock market. But it is harder to find them when market levels have been elevated for a while. And I'm still not seeing very many bargains. So, I'm the kind of investor, I like when people are mass selling. Of course, often that means people are going through a hard time, and that's not fun for me. I have empathy for those people. But on a purely investment, from a pure investment perspective, it's great for my portfolio when there's fear in the markets, because that drives price down. It allows me to buy at a discount. It allows me to get in at a price where, my investments are going to do very well because I'm getting in at a bargain price. And that's really the name of the game, to find great companies at great prices. It's not enough just to find a great company. You've got to get it at least a fair price. If it's an incredible company and you get it at a fair price, you're going to do well. But obviously, the lower the price is for a great company, the better you're going to do. So that's what it means to me to be greedy when others are fearful, to understand what's happening, that there's mass fear, and that actually creates opportunity for investors who buy assets when the price is significantly lower than the value. It's really what value investing is. And it's one of the surest frameworks to do well as an investor, to understand how to value a company and wait until fear overcomes the market and the price drops to the point where it's a really compelling investment. So I just wanted to share my thoughts on what that means. Be greedy when others are fearful. Be fearful when others are greedy. There's not quite enough fear for me in the markets to be producing a lot of compelling investments. But like I said, I think that could change in the next 3-6 months, depending on how these earnings reports unfold and how soon people can get out of their homes and get back to work. So it's all a big question mark. We'll see what happens. But please stay safe out there. It is a scary time that we're living in, and it's important that we all step up and act responsibly in order to protect those who are vulnerable. So that's all I have to share, guys. Let me know if you want to see more videos like this, Warren Buffett quotes, kind of me sharing my 2 cents on what they mean. And hit that subscribe button, because I put out a video every day. So hit that subscribe button and that notification bell. You won't miss any of them. All right, guys, stay safe. I'll see you in the next video. Take care.